Carlson. Marcus, the French government has a plan for the next 3 years for its finances.
It does indeed have a plan, at least, because the government has outlined its strategy to cut the French budget deficit and reduce its debts over the next 3 years. Finance Minister Michel Sapin says that he's committed to bringing down that deficit to the EU threshold of 3% of GDP by 2015. Sapin says it's crucial for France to maintain its credibility, but the plan has already caught flack. Critics say it's dependent on growth forecasts that some say are just too optimistic. Delano de Souza has more.
The French government is hoping business will add some spark to the economy. They're sticking to their guns with the Responsibility Pact announced in January to reduce payroll taxes by 30 billion euros in hopes it will encourage hiring. It's also outlined plans to cut public spending by 50 billion in 2 years. The country said it would respect its deficit reduction targets it's made to the EU. Authorities want France's deficit under 3% of its GDP by 2015 after granting it a 2-year extension. The government's hoping an increase in growth will bring it some relief.
The Responsibility and Solidarity Pacts will allow us to increase growth by half a point by 2017 and also generate roughly 200,000 additional jobs.
The government also increased its growth forecast. The economy is projected to grow by 1% this year, 1.7% in 2015, and 2.25% the following 2 years. A value watchdog made up of auditors and economists have dubbed optimistic.
I prefer a government that's optimistic because they put in place new measures which will have an impact on growth, than a pessimistic government, and you don't have a pessimistic government in front of you.
The new plan has abandoned the president's promise to balance the budget by the end of his term in office in 2017. It will now be sent to the European Commission for inspection.
Meanwhile, companies in the Eurozone as a whole are on the road to recovery. Business activity in the 18 countries that use a single currency is close to a 3-year high. So says the research firm Market and its Purchasing Managers Index. It came in at 54 this month, with anything over 50 signalling an expansion. It was the 10th consecutive month that the reading cleared that key threshold, and it's risen from 46.5 just last year, as you can see right there. German business activity and German companies are seen to be leading the upturn, but France came out with a lackluster individual reading of just 50.5. That's a fall from the previous month, and economists say it's upping the pressure on the French government. Now, Greece has cleared another hurdle during its efforts to get out of its deep financial crisis. The European Commission has confirmed that the country attained a primary surplus of €1.5 billion last year. It means that before interest payments, the Greek government had more money coming in than going out. Creditors have previously said that they would consider more aid for Greece if it reaches a primary surplus, and the Greek government says it's hoping for more help from the outside.
We can, as we have shown, achieve our targets and should at the same time claim better terms of cooperation from our partners and creditors. This is what the announcement from Eurostat today confirms.
OK, the Greek government speaking there. We're going to take a look now at how the markets have been reacting to all this European news. Well, it doesn't seem as if the better-than-expected Purchasing Managers Index helped much during trading on Wednesday, because all main 3 indices in Europe ended in negative territory. The focus on some worse-than-expected data coming out of the Chinese private sector, that put a dampener on trading in Europe. Let's also bring you up to date with the American markets this hour. As you can see right here, we're also seeing some red figures over on Wall Street, with the Dow Jones Industrial Average down around about 0.1% this hour. We've seen some pretty disappointing data coming out from the housing market in the US, with new home sales actually coming down during the month of March, putting a dampener on trading, as I say, over on Wall Street. Let's take a look at some of today's company news. Higher production of commercial jetliners helped Boeing in the first quarter. The American plane maker has posted a profit of $965 million for the January to March period. That's 13% lower than last year, but better than many analysts had expected. Boeing shares, they're increasing in New York, as the company has also raised its full-year profit forecast. Shares in UK-based company AB Foods were among the winners on this side of the Atlantic. Its quarterly profits rose between January and March, driven by a strong performance by clothing chain Primark. Its operating profit was up a quarter in the first quarter. Primark has also announced plans to expand in the United States, with the first store opening next year in Boston. Meanwhile, shares in wireless equipment maker Ericsson tumbled 6% on Wednesday. It came as the Swedish company reported quarterly profits near 190 million euros, higher than last year. But investors, they were disappointed by a 9% drop in sales between January and March. Ericsson says that it will get better in the coming quarter, but, well, we're just going to have to wait and see. Back to you, Francois, for the rest of the news.
All right, many thanks. Marcus Carlson with more business news later on. Time now for sports. Let's say hello to Dan Levy.
Hello.